In this video, I want to show you a quick strategy you can apply today and start making money in the Forex market, in the crypto market, or any kind of market you trade. And this strategy revolves around the price action, and I call it the opening price trading strategy. In my last video, I explained the 3 types of opening price, and I got a lot of comment from you guys that I should explain one after the other. And that is what this video is all about. And the first price I'm going to talk about is the Quasimodo opening price. But before I talk about Quasimodo opening price, I want to talk about the conventional Quasimodo. In the conventional Quasimodo, we have an up movement here in price and a push down. We have another one. And then we break the structure here. We break the structure, more like a change of character. And then price comes back to the Quasimodo line. This line here is called the QML, the Quasimodo line. Is mostly drawn on the wick of the left shoulder. This is the head. So when price comes in here, if you are trading the conventional Quasimodo, you take an entry here with stop loss above, and then you target anywhere below. Same thing for the bullish Quasimodo. We have price trading low, break the structure here, come back to the line, and then push in this format here. So as you can see here, we have the market coming from a downtrend. All of a sudden, we change the direction, and then price tapping on the QML. This line here is the line placed on the wick of the Quasimodo, which is the left shoulder. So when price come in there, you take your entry and then stop loss below, and then you aim higher. But this is not how I use it. All right. So you don't confuse my Quasimodo opening price with the conventional Quasimodo. So if I go to the chart and show you the conventional Quasimodo, as you can see here, we have a Quasimodo here. We have a Quasimodo here. You can see the market here was trending upward. All of a sudden, we broke this level. The moment you break this level, you simply wait for price to come to that area, and then that's how you enter the trade. Okay, for in this case, this will be a loss for you if you are trading Quasimodo. But let me look for a better hand. For example, here, the bullish side here, this is for normal Quasimodo. So why am I taking my time to show you the normal Quasimodo so that you will not mistake it for the opening price Quasimodo? So as you can see, market was trending lower, broke above this high, forming a chop. Price came back to the QML. This is the QML, where if you take this trade and then target up, you'll be in profit. All right, that is done. But the reason why I don't trade this anymore is simple. Why I don't trade the Quasimodo is, number one, it doesn't tell me direction aside from a break. So whenever I see a break, the direction might be a wrong signal, because if you don't know the overall direction of the market, trading chart pattern isn't a good thing for you. And then number two, the reason why I don't trade the conventional Quasimodo is that the wick is the entry. It uses the wick as an entry. The wick then, as you see, all this week, these are false prices. False price manipulation. They're trying to get people out of it. So I will not depend on the wick as my area of interest. Instead, so what I do is to focus on the Quasimodo opening price. Now, let me explain the difference between this, what you see here, and this. The difference is the wick. For the Quasimodo, they will look at the wick. All right. So when price come in here, they will look for a sell. All right. But for me, since the wick gives me false price, I don't want to deal with false prices. Instead, I want to deal with legit and original price, and those prices can be found around the opening price. All right. The opening price is simply the Arami candle on the left shoulder, the buy and sell candle that you can see here. Simply place a line across them. Then when price come there in the future, I will then position myself for a bearish trade. but in line with confirmation, which I will show you shortly. So stay with me, don't go anywhere. Now, for you to have this line, the only thing you need, I don't need to see a chalk. All right, I don't need to see a break of structure here. Because most people will say, okay, it does be a break of structure. No, it's not a break of structure, because a break of structure is when price breaks below the wick. And remember, I don't trade the wick. So when price closes below the wick, is not what I'm looking for. I want the moment price close below this reversal opening price, this bullish Arami candle, the moment price close below that, I have my Quasimodo line ready. So sometimes from my trading, you can have a long wick here. You can have a long wick. You can have a long wick like this. But price just closed below the opening price. I'm okay to go. So if you come back to this level, I will sell. I will not wait for price to close below this wick. So these are the difference between the Quasimodo opening price and the conventional Quasimodo. Because in the conventional Quasimodo, you still have to wait for price to come all the way down and close below this wick. But once I get my closure on this wick, depending on the time frame I'm looking at, and price comes to this level, then I will take my entry criteria. Same thing apply with the bullish Quasimodo. All right, the difference is this is a bullish Quasimodo. So in this case, I'll wait for price to come back down to my Quasimodo opening price. Then I formulate my trade setup for the upside. And as you can see, this is legit because it closes above the Arami candle, which is the reversal opening price. If you don't understand reversal opening price, continuation opening price, and Quasimodo opening price, and you want to have a feel of it, I did a video, link will be in the description, and it will break down everything for you. Now, once you understand how to mark out the Quasimodo line, the next thing you need to do is to formulate a trading plan and an entry criteria. Now, just like in the last video, I gave you the time frame you should be focusing on, because this will not work on all time frame. I have to be honest with you. If you go to a lower time frame than what is here, it will give you too many signals, and you don't want to be taking buy signal 1 minute and then the next 3 minutes sell signal and the next 3 minutes buy signal. It becomes somehow. You want a smooth operation, something that will give you a signal for the day. If this buy, you buy for that day, and if you sell for that day, and you make money out of the market. So the time frame we are looking at is the weekly time frame, the daily time frame, and the monthly. Do not go lower than this time frame, please. If you go to the 4 hour, 1 hour, 15 minutes, 30 minutes, I know some of you like 5 minutes. If you are following Raba Fx, you have to focus on what I'm telling you, because the way to become profitable, one of those ways is for you to follow my teachings. Now, on the entry time frame, you mark this time frame in line with the weekly or with the higher time frame. These are the higher time frame, these are the lower time frames you use. Now, once I mark my reversal opening price, let's assume that this Quasimodo opening price here is on the weekly. This is the weekly. As price approaches here, I have to switch to the 30 minutes to look for something. That thing I will tell you shortly. Okay, so if this is the daily, if this line is on the daily, you drew this line on the daily, and price approaches that line, the lower time frame you go to is the 15 minutes. Do not go lesser than that. I've done my back test, and these are the best time frames for the confirmation, which I will share with you shortly. Then if this line is on the monthly, let's assume you identify a Quasimodo on the monthly, and then you draw out your line, and this is the monthly time frame. As price approaches it, the lower time frame you go for your confirmation is the H4. Write it down somewhere. Weekly, 30 minutes. Daily, 15 minutes. Monthly, H4. Now, what are you looking at as an entry confirmation? What you are looking for is bullish or bearish engulfing candle. So this is what I mean by bullish or bearish engulfing candle. Now, you see a bullish candle, and then the next candle that follows it engulfs the entire candle of the green candle here. Okay, so in this case, you are going to mark the wick. All right, you are going to mark the wick. So the wick, once this red candle closes below the wick of this green, you have a bullish engulf. Now, this is what you are looking for. If you are looking for a sell setup on the Quasimodo line, and you saw this formation, let's assume this was on the weekly, and you saw this formation on the 30 minutes. Once this candle closes, you take your entry, yeah, and then stop loss above, or the stop loss will go to the highest wick that was produced before this was formed. Meaning, let's assume if price has gone up to manipulate people out before forming this engulfing, you don't put your stop loss here. It becomes too aggressive. Where you put your stop loss is simply above that wick. Now, for the bullish engulfing, you have a red candle, then you have a bullish candle that swallows the red candle, including the wick. In that case, you have an engulfing. All right. In short, once you see a candle that closes above the wick of the red candle, we have a green candle that closes above the wick of the red candle. That is an engulfing candle. So for a bullish trade here, for example, you want to buy, and let's assume this was the daily time frame. Price approaches here on the daily. What you need to do is to go to the 15 minutes and look for the bullish engulfing. Once you see it, you pull your trigger. Once the candle closes, at the end of that 15-minute candle, buy, stop loss below, or the next week that was formed. Let's assume we have a very manipulation like that. So instead of you placing your stop loss here, you simply put your stop loss here. All right. So these are the things you need to practice. Take your time, practice this. What next now? I'm going to go to the chart and then show you how to identify the Quasimodo opening price, and then using the engulfing bullish and bearish engulfing to formulate your entry models. So our example is on Euro USD, and I love this example because I can explain more on what is Quasimodo and what is not considered Quasimodo. Now, looking at this, where do you think is the Quasimodo line? If you say this place, you are wrong. All right. The reason why I will not consider this a Quasimodo line is because this level here is not above. It's not above. So you don't consider this a left shoulder. All right. Now, for conventional Quasimodo, this is conventional Quasimodo, but this is not the opening price Quasimodo level. So where I will consider is this level. All right. So when price comes in here, we are going to formulate within the lower time frame how we would have taken entry on this. So without wasting time, we go to the 30 minutes. Remember, weekly 30 minutes. So I'm going to take off this one. This is not the entry I'm looking for. All right. I hope this is the level. October 2012. Yes. So we are going to let this play. And then we observe the moment price get to this level, you start looking for what? The bullish, in this case, the bearish engulfing candle. So price is approaching there. Once you have the touch, now we have that touch. So now that we have the touch, what you need to be doing is to look for bearish engulfing. And the rule of thumb is, for me, I will look for bearish engulfing close or above this line. Take note. What you are looking for the sell, if you are selling, I'll prefer the engulfing to be close to the resistance, which is the Quasimodo opening price, or above the Quasimodo opening price. It gives us entry at premium levels. But if I have the bearish engulfing, if I have the bearish engulfing far away from that line, I will question it. All right. So let's go. So far, we do not have any bearish engulfing, which is good. Now, if we want to consider this a bearish engulfing, I will not consider this. Number one is below the line. And obviously, this my 100 moving average is also below it. I want to see something above it, above the line, or closer to the line. So if you have taken here and you put your stop loss above, number one, the stop loss will be too far. Okay. And it's not optimal. This is not an optimal trade. This is not an optimal trade. I will not be taking this. All right. So if we look again, we don't see. Then all of a sudden, price jumped up, creating a big gap. So we play it out. Price came back in. Still, no bearish engulfing. All we are seeing is bullish engulfing. So all this simply means price wants to push higher into that area. All right. So you stay put. You allow price to do its thing. Now, price is coming back down. Can I see bearish engulfing? I want to see a bearish engulfing closer to this place. But for now, there are no bearish engulfing. So price push higher. What are you seeing? You are seeing bullish engulfing, yeah? This bullish engulfing. This bullish engulfing. So no sign yet for a sell. All right, no sign yet for a sell. As a trader that trades the opening price, you have to learn to be patient. In fact, most profitable traders are patient traders. All right. So I keep playing. Do I have? This did not close below. So this is not a bullish, a bearish engulfing. We didn't have it there. So let's continue. Price came all the way down. We still don't have bearish engulfing. Instead, what are we seeing? Bullish engulfing. So this bullish engulfing simply means price wants to push higher. And as you can see, the price continues to push higher. Bullish engulfing, bullish engulfing, bullish engulfing. If you are selling here, that alone should have told you, okay, I've made a mistake. Just take the loss. All right. Let's assume you are trying to practice what I'm showing to you and you maybe read something wrong. But as you monitor the price action, as I said, price action is the key. As you monitor the price action and you're seeing more of bullish engulfing around that area, it means price wants to push higher. So price pushed higher, came back here. We don't see bearish engulfing whatsoever. There are no bearish engulfing. We push higher, clearing all of this. Let's assume your stop loss was here. As I said, those are not ideal trades here. So we wait. I prefer to see the bearish engulfing. I keep saying bullish. I prefer to see the bearish engulfing above this line. When I see it, it's far better than to see it way down. Okay? In fact, anything you sell above the line is good, premium, because you want to sell. And if you want to buy, let it be below the line. Yeah. So we check. Boom. You can see now, massive bearish engulfing. This is telling you, guys, I am ready to go lower. So in that case, I can bring out my tool, short tool. The moment this candle closes, I will sell. stop loss above. Yeah. Now in this case, the stop loss look wider, but this is a 30 minutes time frame. All right. You can target low, maybe 1 to 3, 1 to 4, not depending. I don't want to teach you trade management. However, if you need trade management, let me know in the comment section, whatever video you want me to talk about. And if you don't understand, let me know the areas you are struggling with. I will do my best to do a video and then help to push you towards greatness. All right. So in this case here, we have our bearish engulfing, and then we sell. Now I can see how fast the price move. The moment you see the engulfing just above this level, and if you combine my rules to this, which I only give out during the mentorship, I have some basic rules that will help you to know the right direction to go through. All right, that the market is bearish, and in that case you want to hold that trade for a longer period of time. So if you come to the daily, for example, you can see how market move very fast, even creating a bearish level there. All right, and then we flew. So that is how you practice using the Quasimodo opening price. It's very powerful. All right, I would like you to backtest this. Don't take whatever I show you as the holy grail. No, it's not the holy grail. But when you backtest, you yourself, you'll be convinced that this works. And then you can add 1 or 2 information or knowledge you have already to even make it a very good strategy for you. So if you have not watched the first video, I'll put the link in the description. And also the London trading strategy, I'll also put the link in the description for you to watch.